All right, Jeff Mudrick, thank you so much for taking the time again to chat. There's been a lot of news going around about this last interest rate bump, completely out of left field, unexpected by most analysts. What are your thoughts here? You're the expert. Tell us what you're thinking.
I'm an expert that predicted wrong. So as did, I think it was something like 72% of economists as of like a couple of days ago, were still predicting them to hold rates. So
Me too.
yeah, I think most people have that wrong prediction there. But it's an interesting time. The report came out a couple Mondays ago that inflation is a bit higher than expected. And when that report came out, seeing that did did prompt people to say, maybe in June there'll be an increase. But I think most folks were thinking late summer or September or the October announcement time, maybe they would increase it at that point. But it's interesting because you and I spoke a lot where the expectation that rates would start to decrease towards the end of 2023. And I don't think it's hard to predict anymore. I'm like done with predictions because who knows what's going on. But I think that late 2023 rate decrease is probably pushed to 2024.
Now, tell us a bit about the impact that this is going to have, practically speaking, on people who are looking to get a mortgage or people who are already in a mortgage with a variable rate.
Yeah. So for anybody who currently has a variable rate mortgage, the latest increase, the latest announcement yet, or June 7th, means that for every $100,000 that you owe on your mortgage, it's going to be an extra $15 more a month, around there. So if you owe $500,000 on your mortgage, it's going to be an extra $75 a month. If you owe $1 million on your mortgage, it's going to be an extra $150 a month. For those, so that's on the mortgage side of things. When it comes to people who have a line of credit, a secured or unsecured line of credit, it's going to continue to hurt. We're seeing unsecured lines of credit at over 11%, and we're seeing secured lines of credit somewhere around a 7.5% mark. So it's very, very expensive to borrow money right now compared to 18 months ago.
Now, this is from what I'm reading in the papers, the highest interest rate that we've had since 2001. Talk to me a little bit about affordability. How is this impacting affordability?
So the latest variable rate increase, it's not going to have a dramatic impact on buyers. And the reason for that is for the past probably 9 months, from the fall of last year, very few people are taking a variable rate mortgage for multiple reasons. And one of them is because they expect continuous increases. So not many people are qualified using a variable rate mortgage. If they were, then this will decrease affordability, a little bit, probably around like 3-ish%. However, or maybe just less, 2%. However, what does not make the news headlines is that fixed rate mortgages over the past 3 weeks have increased by almost a full percent.
What?
Which is mind boggling. So 3 weeks ago, you could have got a 5-year or 3-year or 5-year fixed rate mortgage somewhere around 4.5%. Today, if we're applying for that same mortgage, we're going to hit 5.5% on a 3-year variable rate mortgage.
Why is no one talking? That's huge news.
It's huge, and it has such a bigger impact on affordability. So if you're not pre-approved, if you don't have a rate locked in for 120 days, this is going to decrease affordability by around 8%. So if you could have purchased a property for $800,000 3 weeks ago and you're not pre-approved, your affordability is going to dip to around the 720-ish mark, depending on a few circumstances.
Now, that is actually quite reminiscent to what the conversations we were having were like a year ago when they had raised it in July by a full percentage. That's exactly what happened. But this has now happened on the fixed side and has been happening for the last month. So why do you think this has not been bigger in the headlines?
You know what? So over the past, I can't remember the exact time, but over the past 3 months, let's say, it's been 2 or 3 months, fixed rates have risen 3 times and they've decreased 3 times. The bond yield market is kind of all over the place. So because there's no set schedule of when their fixed rates are going to increase or decrease, like there is with variable rates, it's hard to really, if they've risen 3 times. So if they've risen by 0.25, 0.25, and like this last one was like 50 basis points, it just doesn't get the same attention. And they've also they decreased as well. So I don't know why it should be, in my opinion, because everyone right now is pretty much pre-approved with a fixed rate mortgage, or qualified using a fixed rate mortgage. It should 100% be the main focus of everyone's attention.
Talk to me a bit about the messaging from the Bank of Canada and what their tune is now and how it's changed over the last little bit.
You remember when I was at your office and we were talking about the Bank of Canada pausing, not necessarily pivoting to decreasing, but pausing. And the sense that we got from their announcement in March was that in April is that, they're happy with the pause for now. We're not in a huge rush to increase. We're not in a huge rush to decrease. The messaging now is we've increased it on June 7th. And don't be surprised if we increase it again before, come the fall, which is a little worrisome and can definitely provide potential buyers or current homeowners with some hesitation.
Now, the inconsistency in their messaging to the public has drawn a lot of criticism. What are your feelings moving forward? Should we even be bothering to take any credence in what they're saying in their messaging? Should we just be looking at other factors like bond yield markets and trying to deduce our own conclusions from that? And if we are, what does that data speak to you? Like what would you say is the messaging that we should be actually looking at from the data points and evidence based bond yield data rather than the messaging from Tiff McClem?
Yeah. So to answer the first part of that question, should we be listening to what the Bank of Canada says and what the impacts are, or not what the impacts are, what the announcement actually states and what the projections are moving forward? I stopped making predictions, unless you force me to, a year ago, because anything that's said, there's no consequence should they turn and make a different decision. It's government, right? Like there's nothing holding them to it. It was less than 2 years ago that TIF came out and said, we're going to hold the rate steady for 2 years. 2 years, you can borrow at these cheap levels. This was in summer of 2021. 8 months later, rates started increasing. They didn't stop. They still haven't stopped continuing to increase. So what would I take from these announcements? I would take not much. And I would, like you said, kind of focus on the reports that are coming out. And this isn't for the average person. I would say people in real estate, people in finance should probably focus more on that. And then educate our clients based off of what we're seeing. But, what I'm taking is that when those inflation numbers came out a couple of weeks ago, that made me a little, that probably dropped. I was probably 90% convinced they would hold rates. That probably dropped me down to 85%. So not like a huge drop, but we saw fixed rates increasing. We're going to continue to see fixed rates increase likely and towards the end of the summer. And come the fall, I think we're in for a bit of a rocky summer and hopefully things smooth out in the fall.
Yeah. So what our businesses in terms of sales volume typically rotate in 90-day cycles. You will typically see and be speaking to clients in 90-day cycles prior to them making offers, closing on homes. Are you seeing an immediate visceral reaction from this last announcement from clients?
I am seeing more client inquiries. So not I'm going to stop. I'm not going to put a hold on this. It's more just genuine curiosity, wanting to educate themselves on what this means. I've had a lot of clients in the past who we've got a mortgage for in the past 6 months reach out and ask the impacts on them. And because that most clients took a short-term fixed mortgage, there's no immediate impact on anyone in that regard. Unless, the positive is that because rates have risen, all those mortgages who got in the 4% look fantastic right now. So those clients are happy. But no, you know what? I haven't seen much hesitation yet. When you and I spoke last, we're expecting a busy summer. The fall market kind of push itself into the summer. And, just before we kind of got recording here, we talked about, our pipelines are full. A lot of people out shopping, actively looking, actively putting offers in or going out and seeing places. I do expect that to continue. The only thing that is going to be impacted for clients who don't have a firm pre-approval is the fact that affordability will have decreased.
So would your advice be to people who are planning on making a purchase or selling and making a purchase, just making a move in general this year, to get that pre-approval so that they're not kind of hoping on Tiff McClem being consistent in his word?
100%. So it was actually really interesting. End of May 28th, there was an announcement that fixed rates were on the rise. They started increasing them quite a bit. So I sent an email out to my entire database. I said, hey, if you're planning on moving, if you're planning on renewing your mortgage, or if you're planning on pulling equity out of your property by September 28th, so 120 days from that day, please reach out and let's get you locked in. I had, I was very busy for that night with, I think we submitted something like 53 different pre-approvals.
Whoa.
Just to lock in that rate, because people are active. People do want to move or to get into the market because a lot of people waited for the past year.
And do you think that because we front loaded so much of the interest rate hiking cycle earlier on last year really, that the FOMO that seemed to have built up within the housing market during this last quarter is going to continue, even though we've seen an interest rate hike, that this is more of just a, touch and go situation. It may hike, it may not, but if it does, it's not going to be massive hikes of 50, 75, 100 basis points like we were seeing last year. And so everybody is kind of looking to ride the interest wave down over the next foreseeable future. Is that kind of your take on consumer confidence from the people that you're speaking to?
Yeah, for sure. I don't think it's as much of, oh no, we're in a cycle where interest rates are going to continue to increase. It's more so exactly what you said. Hey, inflation's up, so let's raise it. Hey, inflation kind of stable off, let's keep the rates the same. I don't think there's as much of a, we're in for a tough one here. That's my mentality, or that's kind of the feeling I'm getting from folks so far. And even in talking to, a lot of financial advisors, who some of them did have this predicted correctly that there would be an increase yesterday on the June 7th. But those individuals also say, hey, it's just like you said, a touch and go. Like we'll touch it here, we'll increase it here. But they're not expecting it to be, a summer long trend.
When is the next interest rate announcement?
Next announcement is on July 12th. And the expectation, we'll see him. There'll be another report outlining impacts of inflation. So we'll kind of use that to gauge our best guesses.
Hold on. The reports on inflation don't happen at the same time as the interest rate announcements, right? When do those happen?
I think they happen at different times. I don't know the exact schedule, but I do believe we'll get a report, we should get a report before the next announcement, but no, they don't coincide with one another.
Just for everyone out there, the next interest rate announcement is on my birthday. So I'm really hoping I have a good birthday this year, please.
You don't get these calls from folks not happy. Eh? You want to bring them cheer. Hopefully there's a decrease on the 12th.
Yeah, I'm not holding my breath for that one, but
yeah.
Thank you so much, Jeff, for taking the time out of your day again to chat. I always really appreciate it. Everybody who listens to the podcast and watches my YouTube channel always appreciates you coming on and giving your insight and your expert opinion on what's going on. So thank you so much, and we'll do this again soon.
Love being here. Thanks, buddy.
If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.